All right, guys, it's going to be pretty hard, I think, to like get our eyes away from GameStop because it's going to be such a hectic thing going on this week. But still, right, there's a lot of charts that look good, and it's important not to ignore this and the rotations that are going to be occurring with each sector. I think that solar and I think oil are going to do really well. Remember, I was ahead of the curve on ZOM. I just kind of closed that out. Just because I was kind of getting impatient with it, but overall, it still looks fantastic. If we take a look at Oxy here, I think this is my favorite one, where we're simply pulling back on diverging volume. I'll draw this out really quickly, but you guys can see this whole downtrend, right, has been moving down on lower volume. It's really depicted well on the weekly, right? You guys can see this here. Obviously, the highs had the higher volume, but this entire move down has been on low volume, and it's been leading into the 618 or this discount array, which is my little blue line here. And it's also retesting a really key weekly breakout, right? This was your weekly lower high that sold off and then a higher low caught right here rather than making a new lower low, and then it broke out, right? So this is technically a break of structure retest on the weekly on diverging volume, right? And then obviously the sell-off is very, very well mitigated. We're now printing somewhat of like a hammer candle off of the 618 and off of this break of structure retest at 6194, right? So kind of the confluence that I'm looking here. Obviously, I want to see a break above this downtrend line, right? I don't know exactly the price point of that, but I assume it lines up pretty nicely with 62.93, which is this daily higher low that occurred right here, right where we pulled back on a 3-bar pattern, and then we ended up breaking out and making a new high, which pushed us into this all-time, or not the all-time high, I'm sorry, but the 52-week high here. And then obviously we broke down, higher low, lower high. Then we had a change of character where we continued to break down and start selling and making new lows back into this 618 zone, right? But obviously, you guys can see as we pushed down and retested this old higher low, what did we get? We got multiple candle closes above this. With a really key emphasis of closing above, right? Everything else was wicks underneath, and then it pushed up. We had a lower high, and then we sold off, right? So I really think the trigger for me would be a break above the trend line, and as well as 62.93. I'll be looking for something like this, right? And then a move up and to fill this gap at 65. So big, big level. I really think this has more upside potential, even higher than 65, but I'm going to be targeting 65, right? So I'm going to be looking for like August or July 65 calls. I think, obviously above 62.93 is a nice move, but even if we can just pull back a little bit, right? Let's say we push up like this and hit the red line and pull back and hold 61.94. I think that's an entry as well, and I would risk this swing low here, right? This would be my risk for the trade. I don't know what the exact level is. Let me pull this up. So 60.76, right? We're working in a tight range here, so this wouldn't be a bad loss, but this is definitely something I'm interested in above 62.93 with a break in base or a pullback onto 61.94 and hold, and then I would risk 60.76, right? Obviously, I'm targeting 65. I think we can get a bigger move up, but 65 is a beautiful target for this one. So I'm going to be looking at Oxy very, very heavily. ZOM is another one, right? We can take a look at ZOM. This one's a little bit more difficult in the sense that it's already hitting the target that I was looking at this 117.78 to 117.46 target. I expect this obviously fills, and you guys can see the volume. It's insane, right? So clearly there's an emphasis and a big buyer that's looking to push this higher, but I expect this to reject, right, and maybe pull back and flag and then a breakout based on that, and then I think it can go up to 120.70, which is this old high here, right? And there is potential, right, for it to break that spot, right, and then base this at 120.70 and then make a new all-time high into 123.75. Definitely possible. So I want to keep ZOM on watch as well for this move. It really just depends if we can. It's going to be very similar to Starbucks. If you guys remember Starbucks, right, where we pushed up, we ended up having this nice little breakout, or not breakout, but touch of the earnings candle high. And what did we do? We flagged and then broke out and based, and then we had a huge rip. It's going to look exactly like this one. But yeah, ZOM's going to be on watch for that exact move, right? Rejection off 117.78 to 117.46, a flag, and then I'm going to look to enter on that flag. Or what's going to happen is maybe this gaps up based on this, and then look for a move to 120, and then obviously maybe a couple runners to see if we can get a breakout, pull back on the 120.70, and then a move for the all-time high. On the weekly, guys, this is just another flag, right? This looks fantastic. Like, oil looks so good. This looks like it's going to keep going. I think the all-time high does happen, or the external high, 123.75, but I'm just trying to have smaller targets within the larger targets, right? And then just using XLE, right? This is a pretty simple thing. Same exact structure where we have this flag forming out on the weekly here. We basically swept liquidity at the buy side here under 91.35. You guys can see that on the weekly, and it looks good to continue to fill this gap here. It's a very similar chart to ZOM, but yeah, looking to fill this gap here, and then I think it's going to do the same thing, either pull back and flag or base this gap, and then continue right to this lower high, which is the red line, obviously, to like 95.21, and then potentially push towards this one here. So overall, oil looks super, super good. I just wanted to include both ZOM and Oxy in kind of the same segment here, but definitely going to be something I'm looking at for a very heavy position size. Okay, guys, Nike is another big one that I've been watching. Beautiful chart here. You guys can see it's very similar to a lot of the other stuff that we've traded that's been very, very successful. And honestly, they've created a really nice path of least resistance, and a lot of the volume here is kind of based off of these lows, where I think, the buyers had intent here at the low, and it was a campaign build out, and a lot of this has moved up on low volume, right? You guys can see pretty much flatline volume, and it's moved up on low volume, and then it sold off and then got accumulated here, right, off this earnings gap down, which was, mind you, was on decent earnings, but it was basically an accumulation markup on low vol, right, because a lot of the inventory was already in hand, right, and then they sold it off on high volume, rebought, sold it off on high volume and rebought, right? And they're basically going to rewash these levels, right, and kind of mark it back up through the use of these gaps from earnings, right? We've seen this time and time again. And really, right, we're kind of at this point now where we're ending or nearing the end of this accumulation phase, because we can see high volume kind of coming in now at the highs here, right, versus high volume at the low, right, and then a markup on low vol, right, and you only saw high volume coming again when they were basically earnings the following day, right, and then you kind of saw this make new lows on low volume, right, so kind of showing the intent wasn't really to sell this off. Now we're seeing high volume coming at the lows with intent to move it up, right? So we've seen this time and time again. Really, it's a very simple chart. I'm going to be looking for a break and base over 95.52, which is essentially, right, this earning candle high. You guys can see this was the high here. It broke down, kind of caught the bottom at this swing low, and then obviously pushed up, rejected this high on low volume once again, kind of showing there's not really an intent to sell this off. It sold off on low volume, higher low, really based and consolidated at this higher low with multiple days of equal lows, and then we marked up on increasing volume now. So very simple chart in my opinion. I'm just going to be looking for a break and base over 95.52. I already drew out what I'm going to be targeting, and that's going to be 99.76. So I think 100 calls would work really well for like late July, maybe even going into August, just to get like an extra month of time just in case, right? This kind of consolidates and it dries you out leading into the earnings. But yeah, it's going to be a really high conviction trade here. I really like this. I obviously think Lulu and a couple of the other retail names are going to affect this, but I do think Lulu performs well. Lulu might be a value trap, but I still like that stock a ton. I think it is going to affect this one way or another. So we'll see what ends up happening from Lulu's earnings. But yeah, either way, I'm not going to buy this unless I get a 95.52 breakout retest. And then obviously, kind of longer term vision, if we can kind of push up and fill this gap at 99.76 and really just base out with multiple days or weeks of consolidation and just kind of show that there is price acceptance up here and it's not going to be sold off into. I think there's potential, right, for this to trade all the way back up here into 2025, right? So we can start looking at positions towards that. At least I will personally, because I think this is going to obviously push back up here. I think it's just like I said, it's a rewash of these levels, right? And it's very, very simple. I think it's easy to see with Nike, and I like this chart a lot. I don't know why I didn't see this earlier, but a couple just simple levels here. But 100 is going to be the strike, likely back in like, I don't know, I would say like end of July, early beginning of August. I would be looking for contracts, and yeah, I'll be fully out by 99.76, and then rolls would be above that. So nice chart here. Okay, not my favorite chart in the world, but it's definitely a speculative one, and its shop. We've talked about this multiple times, so I'm not going to go super in depth with this one, but you guys can clearly see we had this major low here from October 2022. Right from there, we obviously built out significant higher lows on the weekly, but not as extreme as this one here, where it really created a large scale move for a higher high. So we're going to use this as our swing low. And obviously this is our second touch point for our higher low trend line. And then from there we have another major breakdown here with this major imbalance bar. We obviously know on the daily this is what is our gap that we're going to be targeting. But same exact thing. Right where we come down, we press into this this trend line once again, and we also have basically a peg candle, right, where we have our 55.51 being this gap here, right, because this is a weekly bar, but also a daily gap in here as well, that buyers are going to want to defend, right? If they lose this, they don't want to lose all that progress and let it slip all the way back to this swing low down here. So this is a big spot. We have a confluence between a peg, right, an old peg setup, and if you guys don't know, peg is power earnings gap. So old peg and major progression at this 55.51 tied into the confluence of the higher low trend line, and really, right, we're seeing a lot of mitigation right here, right, in terms of volume kind of being suppressed. There's not much of a seller emphasis now, and really it looks like a build out here on the daily of potential buyers. You guys can see that with the random spurts here in volume, and right, like I said, just the complete stoppage of sell pressure, right? This is being nicely mitigated. So once again, I think this is a big potential setup here, and I'm going to be targeting 64.26. Why 64.26? Well, it's this gap up here from earnings, obviously, where we had big gap up. This is the peg that's being defended that I talked about. Let's just kind of slide this over for visual purposes, right? We kind of just pull that across. We want to have buyers hold this. They don't want to tap into this because we're losing a lot of progress. But from there, we had this big move up again, consolidation on the daily, another gap up, and then obviously it pushed into these highs here. But if you guys take a look, right, what does this tie into? We have a gap here, but it also ties in really nicely towards this, what? Anyone notice, right? This is their earnings candle, so this is essentially our footprint candle high, right? And this is what starts this gap leading into the upside gap at 75.30. So really nice confluence here at 64.26, but we also want to take the low of that candle. I think this is going to be a really important area for sellers to try to hold price underneath, right? And then we have buyers collecting down here. So I think overall this is a really good if you want to take contracts, and I might do it, I might take some contracts off of this trend line and risk 55.51, but a good spot here, or what I might do is take contracts if we can break above that and then base that, and I think we just get a nice move into the gap there at 64.26, right? I might take some longer dated stuff too to see if we can target the gap up here at 75.30. Right? I think that's a really good target long term. Maybe we get some crazy stuff from the earnings here July 31st that can push us into this gap in an expedited fashion. Ultimately, I think we go up to these prints up here. I've been talking about this for a while, up at 87.99 and 90.55. That might take a little bit of time though. But yeah, either way, right, I might take some contracts here, and then obviously I think I can roll into a more aggressive contract in the target 64.26. But this is definitely going to be something on watch and something I might start on Monday. Maybe just grab a contract or two and I want to get some exposure to this earnings date, right? So like July. And remember, we did this last time too. If you guys remember, I think I took it somewhere here. I don't even remember, but I took contracts somewhere in this range. Yeah, it was like down here, and it pushed all the way up and touched 84 or 83.50, and I never took profits on these. But kind of the same thing, right? I think I can get in early, and then kind of like as it gets closer to earnings, I would obviously trim, leading into like 60. I wouldn't get out at 60. I wouldn't get out at 60, 64, but I would try to like obviously manage this as much as I can, and then look for trims at 64 leading into earnings, and then obviously be down to like nothing going into earnings, and then ideally, right, we can squeeze into the gap here, and then I would look for a pullback for a new position, and then try to take that there. But really nice chart here. There's a couple different ways I can trade this, but just wanted to give you guys my levels, my different thoughts on the different ways I can enter into this. Just to reiterate, right, maybe take position on Monday off of this trend line here, risk 55.51, Obviously, if it breaks out, cool, and if it pulls back onto 60, 64, which is the earnings candle, right, or the footprint candle low, I think that's a good enough reason for sellers to want to like obviously back down and then try to hold the gap, right? So I would look for some kind of flag or pullback in base on 60, 64. I could either add into the contracts I started down here, or I can start in a more aggressive position with a shorter dated contract, as well as like just a straight 65 call, right, which would be targeting this, or maybe a 64 call. And then obviously I would look for a push all the way up to that spot. But yeah, that's pretty much what I'm looking at. Shop's chart still looks nice. I think I'm ready to start this now in terms of the volume and how long it's been consolidating here, because clearly buyers are trying to protect the peg as well as this trend line. All right, guys, you guys noticing a pattern here? Take a look. This is Disney. Same exact thing. Going into this potential gap fill here at 99.32. Right, not much more imbalance remaining on the downside. There's a little bit right here, but I don't think it's going to come down there. I mean, I could be wrong, but I think this is a really nice trade in terms of the risk being right here, right? It's pretty damn close at 99.32, and it got close to that gap fill, and now we're seeing potential shift in sentiment and buyers obviously stepping in off this high volume bar. And it's the same exact thing I just told you guys with Shop, right? We have the earnings candle, or the earnings footprint candle here in terms of high volume, right? Sellers are going to be trying to protect this low of that candle to prevent it from going to the top, right? Because it's more than likely going to trade from the high liquid low. If it breaks that, it's going to go to the high liquid high, right? So same exact concept here. If this can break above 104.21 and hit this and base it, I think it trades to the top of this, right? Remember, a lot of liquidity is going to be sitting at that high there, protecting price from getting back into the gap that they made progress on. So I'd be looking for a trade up into this, right? And then obviously I would analyze or reassess the position. If it rejects this and it's on low volume, I'm going to keep referencing Starbucks and a lot of other trades that we've taken. Maybe it does like a low volume flag. I might look to add into that position or wait for it to break out on harmonic high volume and then pull back in base, right? And then we're going to be looking for something like this. So there's a couple opportunities here and different ways that I can enter this. I'd probably get some kind of position started there. If it breaks out and hits here, right, either just depending on how it looks, another position opportunity here on the flag, or if you want to be ultra patient, just wait for the base on this here, right? So optimal trade entry would obviously be here, because with the higher low, you never know. I'm trying to snipe a low or a bottom. Maybe if the higher low already gets established on the daily and the following day it opens higher than the previous close or breaks the previous day high, you could probably take that momentum scalp, but the safer option would be these two little zones that I have here, right? So optimal trade entry would be here. But yeah, this is looking very, very nice. Disney, I think, has some kind of recovery back to fill. 114.15, I think it does do that, but the safer target would be 107.88. But yeah, I like Disney a lot here. I don't like the company, but chart looks pretty good if it can get over 104.21, right? So pretty nice looking chart here. Obviously, same exact thing. We have this imbalance candle because of the earnings gap down, right? So it's high volume, but remember it's masked underneath that daily high volume bar the following day after earnings. So this isn't like a true weekly bar, right? So there's an imbalance hidden in this, and then obviously the past 3 weeks, you guys can take a look at the volume, right? Just completely mitigated going into that swing low or that gap, right? So really nice chart here. I like the opportunity for this to trade back up into 107.88 and 114.15. So I'm going to keep this chart on watch. But yeah, there's kind of a theme, right, with a lot of the stuff that I've been looking at. Really nice structural charts. A lot of these are gap downs that aren't so severe, even though earnings was a miss, right? There's clear buyers that are stepping in, and you guys can see those footprints being established at either gaps or swing lows, and kind of a true intent kind of coming now that we're seeing the volume step in rather than the sell-off that didn't have volume, right? That's making small lows or kind of just being consolidated at the low. So I like Disney a lot here. This is going to be chart number like 4, I think, that I'm going to be keeping my eyes on. And I got one more. I might kind of tie this and bundle it into like a 2 thing, but I'll show you guys in a second. Okay, so this is it. Really, it's, I guess, solar, right? I think solar's pretty much primed, and it was all started with FSLR for solar. Pretty hard move to catch, in my opinion. We're really kind of broke out and kind of consolidated here off this like single daily high, and it consolidated for, I don't even know, like a week or two, and then it had this crazy lift off, guys, like an insane move almost 50% on the underlying, which is pretty rare. I mean, the weekly chart's pretty extended. I almost said extreme and extended in the same word, but I mean, I don't even know where this could pull back on. You can take that, or you guys can take like this here, like 220. This chart's pretty overextended, so next logical thing to look at would be end phase. End phase looks like it's in its early stages here, right, where we have this downtrend line break, but I don't really know what the pullback level would be on, right? At least from a weekly perspective, I was thinking maybe it breaks out and like retest the trend line, but once again, that trend line is subjective. It's not really coming off of a level, but nonetheless, right, I think solar names do look primed. It's just where does this pull back on? Maybe here, right? If we kind of take this old high, which would technically was a lower high, but obviously we've kind of broken through that. We're basing it, so maybe 127.67. But hopefully you guys can see it's a little murky, right? Airy or array, right? Kind of the same thing, where it's not like a concise area that you can get a pullback on. This would be a straight breakout trade, which I usually don't like doing on names like this, just to do to the open interest. They're usually pretty low OI. It's a little bit spready, so I don't really want to trade a breakout into that one for people that have already been long off down here, right? Because you're going to be buying their fills wherever they have them set at. You never know what you're going to get filled at. So I thought the best thing to do would take TAN, which is just the solar ETF, right? And this one looks a little bit clearer, where we have this kind of like these weekly, daily highs here, these consolidated highs, and really this looks like a Wyckoff chart once again, where we have this like jump of the creek here, and it looks like it's an SOS pulling down into 4809, and it's a very simple target, whereas some of the other names don't have a concise target. This is a nice target up here to 50.92 to 51.73. So if we can open just somewhat close to 48.09, I think I'm going to take that and kind of just risk that on like a weekly level. I want to get some time on these because these aren't very expensive. So I think I could risk a weekly candle close underneath. As usual with swings, I'll probably only do like 5 contracts on this, just so I can stomach any kind of drawdown underneath this line, just so I can obviously stomach a close under, right? I don't want to be reactionary to it if it breaks under. I want to give myself some time to see if it plays out. But yeah, I really like this chart. I think it goes to 51 to 51.73 and fills that gap. And obviously, I think a lot of the names are going to kind of catch a bid, right? We usually see this going into Trump. Well, I wouldn't say Trump's going to win the election, but kind of going into anything in regards to an election that's including Trump, right? We see, solar names do very well. We see oil do well. We see weed stocks do pretty well. So I think there's going to be a sector rotation into some of these names. And I kind of want to be here for it, right? I think First Solar was the first domino that kind of showed the strength and the rotations that had occurred. And a lot of these other names are going to lag and have similar moves. So I'd rather take the ETF itself and trade it as a basket versus an individual name that doesn't have clear, concise levels in terms of risk or target, right? Because I would love Enphase, but it's hard, right? And I think Array is kind of the same thing, where I really don't know where to enter, where to risk, and what to target. I think this is pretty simple, right? And I think this is a nice SOS of the creek here at 4809. Initially, I was looking at this, right? Kind of like that spot right there. This is the old, progression gap that you can use, and it lines up pretty nice, as you guys can see, right? Like this looks pretty clean. I was kind of thinking 46.99 would be the spot to risk, right? Kind of looks good too, right? Where we have this level being held, which is the bottom. That's obviously what you want to see be held as support before they start to lose the progress they made, and it lines up nicely, right? You guys can see the these daily highs reject there. There's a rejection there. So, it could be, you could do it either way, right? I mean, there's not really a perfect answer for what needs to be held. You guys can see the weeklies all closed underneath this. So either way, it's a big point of emphasis. However you guys want to draw it, 46.99, which is the bottom of that progression gap, or you guys can pull it up a little bit higher to like right there, right? It doesn't really matter. It's pretty close in terms of, the sense that it's there. I mean, overall, it's the same area. So that's going to be something I'm watching as well. I did want to say, like, you could individually trade the solar names as well, right? It's just whatever you want to do. But I think keeping your eyes on solar is going to be a big thing moving forward into the summer. But I like TAN a ton. And that's really it, guys. That's really it. There was one that I was looking at. I might take it off as SE. Right, so Seagate or C Limited. I don't know why I always want to say Seagate, But remember, we got in way back here. This is almost a picture perfect Wyckoff chart where we had this breakout of that kind of like that top, right? We pull back and flagged, and obviously we broke out again. We're testing this old high here, right? This June 12th week as well as the July 31st week. And it's pulling back on low volume once again. Very, very nice chart here. I think this keeps going all the way till this gap here at 85.79 to 79.57. But for some reason, I just feel like it's too extended. I don't know why I don't want to pull the trigger on this one. It could be a mistake, but I think there's some other charts out there that fit criteria a little bit better, because this definitely could fail, right? This 66.39 level could pull back and go back to these daily highs here. I mean, there's a lot more volume and a lot more support here at 63. So maybe if that happens, I'll be more interested in this chart. But you know, SE is something I'm looking at, but just not. It's not as nice as some of the other charts, in my opinion, and it's not as lucrative with low risk, right? So if you guys want to keep this on your radar, it's definitely something I had. I don't know why I don't have Roblox on here. In terms of current swings, right? I mean, Roblox, Starbucks are doing fantastic. Hood's doing all right. GameStop, like I said, is going to have a crazy move. Intel, right? Massive, massive volume coming here off the low, right? I think the accumulation might be done. I still believe this name's going to mark up hard. I think it's going to go to 34 to 34.50 very, very quickly. But I mean, I'm still targeting 37.82, which is that dark pool print, but also the gap here at 37.08 to 36.70. I might add into this chart if we can, you know, kind of open pretty close to the close here. I obviously don't want to be adding into the gap, but you know, maybe if it does push into the gap, I'll start a new position. Right, if we get something like this, I'll roll and once again into more aggressive strikes, shorter dated, targeting 34 versus the 37 that I currently have, and I'll be out of the trade. Oh, so by here, right? And that's kind of the target that I would have. But Intel looks good, man. All the swings that I've had, for the most part, have done fantastic. Last week, if you guys remember, I think I brought it up earlier in one of my clips, like, I barely stopped out of ZOM. And the only reason I stopped out of ZOM is just like, I don't know if I want to have my money in here, because I usually don't trade oil. I usually don't swing oil. And I just lost my patience, because I remember it slightly wicked underneath this low here, right, which was the weekly low. And sure enough, all that was a daily wick, right? It closed it back above and it went straight to target. But I'm not going to take my eyes off of it now. I think this has the momentum I was looking for versus the consolidation that I was stuck in. But yeah, I mean, that's the only swing I really lost on. Oh, and then Mara was the other one, right? I started 5 contracts on Mara, risking 20.42. The chart still looks good, right? If we pull up like volume by price, like this whole area has a ton of support and a lot of volume backing it. But I just don't like the fact that I have to worry about Bitcoin all the time, right? I mean, 24 hours Bitcoin's trading, and Bitcoin has to do good in order for Mara to perform well. You can't have Mara's chart look good, Bitcoin look like shit, and then obviously expect Mara to do its thing. It just doesn't really work that way. And if it does, it's once in a blue moon. But I mean, those are the only 2 losses I've had on my swings, right? And everything else has been gravy. So I really like the swings that I currently have. I like the idea of adding into a few of those. Roblox looks healthy as well, right? I mean, the color's going to be off a little bit because this was one of my white charts, right? I mean, it kind of broke this little sloping overhead resistance. We got and breached the gap here a little bit at 37 or 33.71. I ideally would like it to gap above next week, right? Kind of like that, and then start to trade up, because right now we kind of closed under, but we did break above the trend line. But I'm up a good percent on these. I'm up like 17% on my contracts. So this chart still looks healthy. We just need to see a gap above or a break above 33.71 and close above that, and I think it's going to progressively make its way into this gap here, right? And that will be a sick trade. But this one's going to take a little patience, so I do have some time on this, so I'm not too worried. But yeah, that's going to be an update for everything, guys. I'll post the charts as well, so you guys can obviously kind of reflect back on the charts themselves and not just have to rely on this video. Oh, I've been talking a long time. So once again, oil is going to be a big focus. Solar is going to be a big focus, and I'm looking at Nike, Diz, and Shop as well. So kind of like, you know, dude, there's a lot of names that look really good, guys. There's going to be a lot of rotations. I don't have really any tech on watch, to be honest. Like, Amazon, I was something I was gonna look at, but I don't know if I like this. I think it might just have a lower high. Tesla, I still like, but I'm gonna stick by my guns. I don't think this breaks out. I think this is actually gonna sell underneath this swing low and trade down into like the 161s, and I'm gonna stick by my guns here. If I miss it, I miss it. But yeah, ideally this sells, and I'm gonna kind of stick by my guns. So I'm not gonna even have this on the scan this week. So that's gonna be all, guys. I appreciate your time. We'll see what GameStop does, because I might not even need to trade this week. Because if GameStop goes crazy, guys, I'm probably not gonna trade. I might do a couple swings here, but yeah, I'm not gonna be super crazy. So that'll be all, guys.